Welcome to Weekly Charts. In this edition, we'll start with a quick review of recent economic data and market conditions, including major indices, market breadth, and sector dynamics. Next, we'll explore key developments and stories from influential companies like Google, Oracle, Tesla, and Broadcom, analyzing their market impact. Finally, we'll look ahead to next week's major events and earnings reports, uncover potential opportunity. On December 12, 2024, the Swiss National Bank, SNB, made a surprise decision to cut its benchmark interest rate by 50 basis points to 0.5%, marking its fourth cut this year and the largest in nearly a decade. The move, exceeding expectations of a 25 basis point reduction, aims to counter low inflation and the strong Swiss franc, which has weighed on exports and industrial growth. Inflation in Switzerland remains low at 0.7% year-on-year in November, significantly below Eurozone levels. The European Central Bank, ECB, also lowered its key interest rates by 25 basis points, effective December 18, 2024. Alongside the cut, the ECB revised its economic growth forecast downward, projecting growth of 0.7% in 2024, 1.1% in 2025, and 1.4% in 2026. The ECB signaled a shift in its stance by dropping references to restrictive monetary policy, opting for a data-dependent, meeting-by-meeting approach and leaving room for further cuts in 2025. The Bank of Canada, BOC, reduced its key interest rate by 50 basis points to 3.25%, marking its fifth consecutive rate cut and second oversized reduction in a row. BOC Governor Tiff Macklem noted that future rate adjustments would be more gradual, with a measured approach to policy easing. However, Macklem highlighted the potential for 25% tariffs on Canadian exports to the U.S. as a major new uncertainty, which could impact economic stability. The rate cut is expected to ease borrowing costs and support the housing market and consumer spending. On December 9, 2024, China's Politburo announced a shift to a moderately loose monetary policy, replacing its long-standing prudent stance for the first time since the 2008 global financial crisis. This change aims to address deflationary pressures and boost economic growth through measures such as potential interest rate cuts, lower bank reserve requirements, and increased fiscal spending to tackle weak domestic demand and challenges in the property sector. Wall Street banks anticipate China will implement its largest interest rate cuts in a decade, with key policy rates potentially reduced by up to 40 basis points next year. These measures reflect China's intensified efforts to combat deflation, stabilize its economy, and navigate uncertainties in the global economic landscape. The Consumer Price Index, CPI, for November rose by 0.3%, in line with expectations, with food and shelter costs driving the increase. Year-over-year CPI stood at 2.7%, reflecting steady but above-target inflation, while core inflation, excluding food and energy, remained unchanged at 3.3%. These figures suggest inflation remains a concern as it continues to exceed the Federal Reserve's 2% target, though the data aligned with market expectations. Producer Price Index, PPI, data showed an uptick in wholesale inflation, raising concerns that rising costs could trickle down to consumers. This has introduced uncertainty about inflation trends and potential Federal Reserve rate decisions, with some investors speculating on delayed rate cuts or even possible rate hikes. Gold prices saw volatility following the PPI release, underscoring commodity sensitivity to inflation signals and investor caution regarding monetary policy adjustments. The major stock indices showed significant divergence in performance this week. The Nasdaq stood out as the only index to rise, continuing to reach new highs, and on Wednesday, it closed above the landmark of 20,000 points. This milestone marks a significant psychological threshold, reinforcing the bullish sentiment for the tech-heavy index, though it also raises questions about sustainability at such lofty levels. Meanwhile, the S&P 500 consolidated at elevated levels. In contrast, the Dow Jones Industrial Average and the Small Cap Index fell below their 20-day moving averages, reflecting a weak short-term technical pattern. Market breadth was notably poor, suggesting that overall market momentum remains insufficient, with gains driven primarily by a handful of large-cap stocks. Such narrow leadership poses a hidden risk, as it indicates fragility beneath the surface of the market. The divergence among indices could signal a potential market correction. Investors should closely monitor whether the weaker indices can recover their short-term averages and track changes in market breadth and capital flows. It's also essential to prioritize risk management and adjust portfolio weights accordingly to navigate the uncertain environment. Sectors such as raw materials and public utilities continue to be under pressure, while consumer staples and communications sectors closed higher, with growth stocks outperforming value stocks. With 9 of the 11 major sectors declining, 6 of which dropped by more than 2%. Google's unveiling of its new quantum computing chip, Willow, on December 10, 2024, led to a 6% surge in Alphabet shares, reflecting investor excitement over this breakthrough. Willow features 105 qubits and exponentially reduces errors as it scales, solving a problem in just 5 minutes that would take a classical supercomputer 10 septillion years to complete. Key advancements include improved qubit performance, with T1 times approaching 100 microseconds, 5 times better than previous generations, bringing Google closer to running commercially relevant quantum algorithms beyond the capabilities of traditional computers. The announcement has sparked discussions about Willow's transformative potential in fields such as drug discovery, fusion energy, and battery design, as highlighted by Google CEO Sundar Pichai. However, experts caution that advancements in quantum computing could disrupt encryption and cybersecurity, urging businesses to prepare for potential challenges. This milestone marks a significant step forward in Google's quantum computing efforts and positions the company as a leader in the race for practical quantum technologies. Tesla's stock closing at an all-time high of $436.24 reflects growing investor confidence, driven by Tesla's leadership in electric vehicles and advancements in autonomous driving technology. Optimism is further boosted by the anticipation of a Santa Claus rally and broader market support following positive economic indicators like CPI and potential Federal Reserve policy adjustments. With the EV market expanding and Tesla's innovative edge intact, investors remain bullish on its long-term growth prospects. However, the excitement surrounding Tesla comes with a note of caution. The stock's history of volatility, coupled with lofty expectations, raises concerns about potential overvaluation if market dynamics shift unexpectedly. Investors are advised to remain balanced in their approach, as even minor setbacks in economic conditions or Tesla's execution could trigger sharp corrections in the stock price. Broadcom delivered strong Q4 and fiscal year 2024 results, reporting $14.05 billion in quarterly revenue, a 51% year-over-year increase, alongside GAAP EPS of 90 cents and non-GAAP EPS of $1.42, both exceeding expectations. Adjusted EBITDA reached $9.09 billion, or 65% of revenue, while free cash flow stood at $5.48 billion. Key segments performed well, with Semiconductor Solutions revenue at $8.23 billion and Infrastructure Software contributing $21.5 billion for the fiscal year, boosted by the successful VMware integration. Notably, AI revenue surged to $12.2 billion, marking a 220% annual growth, driven by strong demand for Broadcom's AI XPUs and networking solutions. The market responded positively to Broadcom's performance, with its stock price jumping 24% and its market capitalization surpassing $1 trillion, making it the 8th U.S. company to reach this milestone. Looking ahead, Broadcom provided robust Q1 FY 2025 guidance, projecting $14.6 billion in revenue and adjusted EBITDA at 66% of revenue. CEO Hock Tan emphasized AI growth and the VMware acquisition as critical drivers of success, positioning Broadcom for continued leadership in both semiconductor and software markets. Oracle's Q2 earnings fell slightly short of Wall Street's high expectations, reporting earnings per share of $1.47 versus a $1.48 forecast and revenue of $14.06 billion, just below the $14.1 billion consensus. Cloud services revenue grew 24% year-over-year to $5.9 billion, driven by strong demand for Oracle Cloud Infrastructure, which grew 52%. However, moderating growth in on-premise license revenue, and a sequential dip in Oracle's backlog to $97 billion raised some concerns. The company's capital spending surged to $4 billion, outpacing analyst estimates, resulting in negative free cash flow of $2.3 billion for the quarter. Despite this, CEO Safra Catz and founder Larry Ellison emphasized Oracle's leadership in generative AI, aided by partnerships with Google and Amazon to meet rising demand. Investor sentiment turned cautious after the results, with Oracle shares dropping 7% post-market, though the stock remains up nearly 70% in 2024. Wall Street analysts remain optimistic, citing Oracle's AI prospects and expectations for free cash flow to turn positive in early 2025. CEO Safra Catz's adoption of a Rule 10b5-1 trading plan to sell up to $1.33 billion in shares next year, tied to expiring performance stock options, added further focus on Oracle's future growth. While the stock's high valuation reflects lofty expectations, analysts believe Oracle's investments in AI and cloud infrastructure position it for continued growth. Key events for next week. Let's start with the most anticipated event, the Federal Reserve meeting. On Wednesday, the Fed will hold its final interest rate meeting of the year, where the market consensus points to a 25 basis point rate cut. Investors will pay close attention to the Fed's guidance on future interest rate policy and any updates to their economic forecasts. Next, we have important economic data on the horizon. The Personal Consumption Expenditures, PCE, price index, a key inflation indicator closely watched by the Fed, will be released. This data will offer critical insights into inflation trends and could influence future monetary policy. Finally, earnings season continues with notable companies set to report their quarterly results. Micron, Carnival Cruise Lines, FedEx, and Nike will be in the spotlight. Investors will be looking for performance updates and guidance, particularly in the context of the broader economic environment. In summary, market focus next week will revolve around the Fed's guidance and economic forecasts, the PCE price index for inflation insights, and earnings reports from key companies. Stay tuned as these events unfold and shape the market outlook. The Nasdaq 100 index was rebalanced on December 13, 2024, with changes effective for trading starting December 20th and fully implemented by December 23rd. Additions included Palantir Technologies, PLTR, MicroStrategy, MSTR, and Axon Enterprise, Axon, while Supermicro Computer, SMCI, Moderna, mRNA, and Illumina, ILMN, were removed. This reshuffling impacts investors in Nasdaq 100 tracking ETFs like Invesco QQQ Trust, QQQ, as newly added stocks often see increased investment and price upticks, while removed stocks may face short-term selling pressure. Market sentiment showed excitement, particularly around MicroStrategy due to its Bitcoin exposure and Palantir for its data analytic strengths. Discussions also speculated on Marathon Digital Holdings, MARA, as a potential future Bitcoin-related addition. Mixed reactions followed the removals, with some investors viewing it as a buying opportunity for the excluded stocks. This rebalancing reflects ongoing market interest in cryptocurrency-related firms and tech innovation shaping the Nasdaq 100. Apollo Global Management, APO, and Workday, WDAY, will join the S&P 500 index, replacing Corvo, QRVO, and Amentum Holdings, AMTM, effective before market open on December 23, 2024. The news caused APO and WDAY stocks to jump 6% and 8% in after-hours trading, respectively, while QRVO and AMTM saw slight declines. Inclusion in the S&P 500 boosts visibility and demand as index funds adjust their holdings, potentially driving short-term volatility but longer-term investor interest. Apollo's addition strengthens alternative asset managers' representation, while Workday enhances the index's technology sector, reflecting trends in financial services and enterprise software. Comerica, CMA, and Carpenter Technology, CRS, will join the S&P Midcap 400, replacing Vishay Intertechnology, VSH, and Carter's, CRI, effective before market open on December 23, 2024. CMA and CRS stocks saw slight declines after the announcement, while VSH and CRI experienced modest gains as they moved to the S&P Small Cap 600. These changes reflect index fund rebalancing as portfolios adjust to the new composition. The reshuffling ensures accurate market cap representation, with potential for increased institutional interest in CMA and CRS, while VSH and CRI may attract investors focusing on smaller cap growth opportunities. Qorvo, QRVO, and Amentum Holdings, AMTM, will join the S&P Small Cap 600, replacing Kelly Services, Kelia, and Service Properties Trust, SVC. Vishay Intertechnology, VSH, and Carter's, CRI, will also enter the Small Cap 600, filling the spots left by Comerica, CMA, and Carpenter Technology, CRS. Additionally, Terreno Realty, TRNO, and Champion Homes, Sky, will replace Hudson Pacific Properties, HPP, and Regenxbio, RGNX, in the S&P Small Cap 600. These changes reflect ongoing adjustments to maintain accurate market cap representation within the index. The S&P 500, SPX, is currently showing mixed signals as we head into year-end. After reaching all-time highs, it has pulled back into a 5-day consolidation area, holding an important support level. On the 30-minute chart, an ascending triangle suggests bullish breakout potential, but the recent MACD bearish cross warns of a possible reversal. For short-term traders, the plan is to stay objective and focus on price action. If SPX breaks above the triangle resistance, consider a long trade with targets at the recent highs and beyond. If support fails, look for short opportunities with targets at the next key support levels. If the market remains range-bound, traders can consider buying near support and selling near resistance with tight stops. Heading into year-end, the broader trend remains bullish, but traders should manage risk carefully, avoid bias, and wait for clear confirmation of a breakout or breakdown before committing to a trade. NVDA, has formed a head and shoulders pattern with the price approaching a critical neckline near $131. Two scenarios could unfold: a fake breakdown followed by a strong bounce, or a fake rebound leading to a real breakdown. In the first case, NVIDIA may dip below $131, triggering stop losses before reversing sharply upward, offering short-term traders a long opportunity if confirmed and presenting long-term investors a potential buying dip, especially if the broader market, SPX, remains strong. Conversely, a confirmed breakdown below $131 with strong selling volume signals downside momentum. Short-term traders could short NVIDIA on the neckline retest, targeting lower levels like $125 and $118, while long-term investors should wait for stabilization or stronger technical support before considering new positions. The broader market condition reflected by SPX will be key. If SPX holds support or breaks out, it increases the likelihood of NVDA's fake breakdown and bounce, while a bearish SPX breakdown may accelerate NVDA's decline. Traders should remain nimble, waiting for confirmation of breakouts or breakdowns, while long-term investors should focus on NVDA's fundamentals and overall market direction to identify better opportunities. Flexibility and patience will be critical as NVIDIA approaches this pivotal level.